Alrighty, traders. Hello, everybody. Welcome to today's live stream. Hope this is all working well. I wanted to do hopefully this is working well. Anyway, I wanted to do this. Boom. There we go. I want to do a live stream for you covering the markets right now and some really important things that are happening in the markets as we speak. So I thought I'd come on and do a bit of a live stream for you to help you when it comes to what's going on with all of these markets right now. So that's what I want to cover in today's video. A bit of a live stream for everyone. Hey, boom. Let me do this here. Let me bring this up. There we go. Boom. All right, bit of a live stream for everyone. Now, let me add this here. Just adding the charts itself, and I want to do a bit of an update for everyone. Oh, isn't that true? Is this one right here? Right there. See that there? That right there? Discipline. Strategy, consistency. Ain't that true? Ain't that true? Right, so let's get into today. Let's add the charts. Let's see, is this going to work okay? Oh. Oh, there we go. That's better, isn't it? That's a bit better. Just trying to size it a bit more there. Right, so let's bring this up to here. So let's actually start off with today's session about where I see things going overall with these markets. Obviously looking at the S&P right now, looking at the NASDAQ as well too. And let me see if this is going to work. Right, so starting off today with the stock market. Going to be looking at the S&P 500, looking at the NASDAQ, looking at the Russell, and looking at the Dow Jones from here as well too. To see what's going on from here and what's going on with the markets right now. So one of the interesting things that I'm seeing right now when it comes to just all these markets here, right? So we can see this is obviously the weekly chart here, big long-term weekly chart. One of the really interesting thing is that I personally want to be going down the path of making my own decisions around where the actual major support, major resistance are here. So for me, and I know a lot of people who have been drawing trend lines. Can I draw that from there? I know a lot of people who have been drawing trend lines, they would be focusing more on probably this one here. So from there to there, as you can see, that's the one that people have been focusing on the most. It's that sort of channel that they've been focusing on, which is valid, by the way. There is validation behind that there because we did actually reject it there. Now, the really interesting thing is that there's a thing called a channel projected target in the markets there. So a channel projected target in the markets. So what we're seeing here is we're seeing that if we see a bit of a channel, okay, if we have a channel that looks like this here, sideways, you project the high and the low, and you project that up and you end up getting a target. If we have a target level where we have more like this here and this here, Well, what you do is when you actually get a target there, when you actually have a target, if you measure from low to high and project that up, that's typically where you have the target of that, right? So whenever we do break out of these channels in place, we can start to get a good understanding of where this is going and what's going on right now in the markets there. So for me, if people want to use this as the channel, right? If people want to use this as the channel and people want to use this more as what we're seeing through here, then I want to share with you where the projected target is, because now we are clearly breaking out of this channel right now. We're clearly breaking out of this channel right now. So right now, if I use this channel, this channel here, right? Okay, this is the one that most people have been using when looking at the markets here. So as I said before, all these channels work the same way, right? We have channels, and when we get breakout of channels, we can now get a target off that channel. So just channel projected target. And so one of the really big things that around that is that now we're clearly breaking out here, clearly breaking out of this top up here. So when we're seeing that, now we can get what? Now we can see that there's a projected target here, right? So if you measure from the low to high, and this might sound crazy, but this is the way these patterns work, right? We have these projected targets. And so this projected target from this low point, if we project that there and we project that up like that through there, right, we now get a target on the S&P 500 of around 9,000. So if most people are using this channel here as the channel that's in place, then what we see is that's going to be the target of where this market's now likely to be heading to, which is that roughly 8.5, that 9,000 level from there. Now, how it gets there is going to be really interesting to see. Meaning, like, do we continue this strong move to the upside? As some of you guys have seen through my market updates, is that I'm in option trades right now, and I'm now running out of time, so I need to exit. That's what that whole exiting my trade and why I sold it all was in place, because I was an option trade and I needed more time, I'm just running out of time with that option there. And if I'm not cautious, if I'm not careful enough, then that is going to get worse and worse and worse. And if you guys are trading options, that last 30 days of the option, that's when that time value really gets hit hard. And then suddenly what ends up happening is your options end up getting crushed. So I'm about a month and a half left of my options. And so that's why, like, I've been doing these videos lately about how I am, I'm getting out of these here. And so, but for me personally also, is if I bring this, let me sync these in layout. Oh, that's synced in layout as well. Right. So if I go back to here, let's bring this up to here. Right? So we're seeing this here. Now, check this out. So that's obviously the target to the left there. This is the weekly chart to the left. This is the daily chart to the right here on the S&P 500. So we're just breaking out through here. So is this the start of a really big move? Ultimately, I have a 9,000 target on the S&P 500. I ultimately have a target of that through there. And the interesting thing is, for me, is like, well, how's this likely to play out? But ultimately, we see that we see that move going through there as well too. So very big clear breakout. I know there's a lot of technical analysis or technicians, if you're going to call them that. What is that? Okay, cool. I know there's a lot of I know there's a lot of technicians out there that were saying that we're likely to get down to the bottom of the channel. And I didn't believe that. Now, one of the big things that helped me make a decision that I didn't believe we're going to get to the bottom of the channel, where again, if I look at this daily chart and I squeeze this daily chart up here, oh, what happened there? Right? As we can see, right? A lot of traders here were thinking that we're likely to get a move to the downside here, like down to the bottom here. And one of the big things is, one of the really interesting things is, if I show you this here, if I show you the fear and greed index, let's bring this up to here. Right, so let me bring this fear and greed index up. I'll show you this here. So because fear is the fuel for rallies in the markets. Fear is the fuel for rallies in the markets. And why I didn't believe we're likely to, if I go back to this chart here, why I didn't believe we're likely to get down to the bottom here. Well, I know a lot of technicians were actually looking for that target there. And I didn't believe that because of just how much fear there was actually in the marketplace. Meaning, if you have a look at this here, this low point down the bottom here had the exact same amount of fear built into the markets as it was through here. So it was the exact same amount of fear that was actually going on there. And then suddenly we get a big strong rally out of this level here. So we can see very strong move to the upside from here all the way out to the upside through there. And as you can see, if we go to the fear and greed index, you can see down the bottom here, that there was November. And also that was also, this is the start, obviously the bottom of that there. But as you can see, the fear and greed index, every time we get down to the extreme fear, there's extreme fear in the markets, causes the market to rally. And that's why we've had a very, very, very strong rally out of the markets here, because of that extreme fear in the marketplace. And now we're just hovering around where we are right now. Just hovering around here, and the markets continue to push higher and higher and higher as we continue on from there. So overall, we're in greed right now. That's okay. But these extreme fear readings causes the market to rally. This happened in November last year, and this also happened where we are right now as well. So let's go to here, and I'll bring this up to here for you guys. And so therefore, this fuel down the bottom here, the fear that we had through here is the exact same fear we're getting right now. And that fear is the fuel for more upside to come. And so therefore, we've ended up getting a very strong rally from here. So once again, I've always had a 9,000 target on the S&P 500. The only thing looking at the markets right now is that we have indeed just had such an incredible such an incredible move to the upside that there's a thing called price and time. And every time we go vertical like this here, one, that's called price, that's called the energy using phases. And there's also the energy building phases, right? So energy using, energy building phases. And so as we've had this very strong move to the upside from here, we're likely to go through, I would say, some sort of a correction soon, some sort of a pausing period, and then we're likely to continue up from there. A lot of people are really, the interesting thing is that a lot of people are not sure about with my positioning when it comes to the markets there. I'm still very long. I'm still overall bullish towards 9,000. I still believe we're likely to get there. Again, my positioning and reason why I sold, or I'm selling, I still haven't actually sold yet. I'm going to sell. The reason why that's the case is because it's an option trade, right? That's all it really is. And if you guys have listened to my market updates, I've talked about markets. I've talked about how my option position is up very nicely, and it's running out of time there. But ultimately, for the S&P 500, by looking at that level from there, and again, this is what we're covering right now. That's the reason why I see so much more upside coming with the S&P 500 there. So we are just getting started. Now, within that, guess what we're going to get? We're going to get some really, really, really nice moves from here. Unfortunately, I know there's a lot of people that are short these markets right now, thinking we're going to go down, right? And I know that's what they're feeling right now, right? They're feeling there's like, are you serious? The market's going to top out now. It's going to top out now, right? Something what ends up happening, and then something what ends up happening. They're short. They're watching their account go down. The market's continuing up, and then suddenly they end up just going through just this one big long. And they're gone. They're dead. They're gone. Now, why is that? Rule number one, guys, if the overall trend is up, as you can see, the big profits have been going up. So just go with that, right? Because I promise you, trying to go short these markets here causes your heart to go. And it's not good. And it's not good. So just go with the market, right? Man, go with the trend. Don't be trying to pick a top here. It blows my mind away because I'll bring this up to here. We're still seeing why. We're still seeing a lot of people out there thinking this is a dead cat bounce or a fake out or it's the, leaving the bag there for it's the retail traders are left holding the bag because the smart investors are leaving the bag or something like that. And it's like one thing that's so important to understand is that these charts are collective wisdom of all the market, all the smartest investors out there. So the trend is still continuing up from here. So just go with it. That's all I was doing. I went with it. I made some good money. And now, guess what? Now I'm exiting here. Right? Now I'm exiting for a nice profit, by the way, for a nice profit. Again, like for me, and just so you guys know, my positioning was, if you look at this here, if I blow this up here, I actually end down the bottom here. I was originally thinking this move we're getting right now, I thought that was going to start probably towards the end of this year, maybe the start of this year, meaning that I actually entered down the bottom as this market came down the bottom here. I actually entered my call options down here. So I saw this market rallying and then having a big move up. So looking at that, looking at that, I was off with the timing because I saw the market rallying, which we initially did, and then I saw the market actually doing something like that. That's where I saw it going. We didn't end up getting that, right? We didn't end up getting that. What we ended up getting was, as you know, we rallied, we paused for a bit, and then we had the short-term drop. And then this point through here, that point through there is what I actually expected to see. What I actually expected to see through here, through that point through there. Well, that's what I was looking for anyway with my trade. Now I bought plenty of time with my option because it was an option trade that I did back here. It was actually a big position, by the way. It was a big position. And one of the things is that all I had to do is we stand here, and then now I bought down the bottom here, and then now as the market's rallying very strongly, my call options have gone through the roof, and that's given me a chance to sell it at a very nice profit. That's what trading is about, right? Trading is not trying to pick the tippity top of moves and so on and so forth. Of course, the analogy of, right, like we never know where this overall big bull market's going to end. So I personally am not going to hold on to it, right? Because how many times have you seen where you do really well for a while, right? And the market's going, and you're doing really well, right? You're doing really well on a trader, and the emotions, right? The emotions within you trading right, is that you're doing really well as a trader, or getting into a position and you're doing well, right? It's going for you, it's going for it, it's going for you, and you're like, here we go, it's going right, and you're getting it's happening right, you're getting the applause and so on and so forth, and then you hold on too long, right? There's trading, and then there's like, okay, I'm at a nice profit now. I don't know where the top's going to be, but I better get out. And then suddenly what happens, like what happened with silver, is literally within one day, you end up getting and it's gone in one day. This is the reason why these meme coins out there and these new ETFs out there are just so crazy dangerous. Right? Because that's what you end up getting with those there. And again, that's what ended up happening with silver. I know that because as silver's, and I'm not on the silver part yet, but as silver's making a big drop, a big rally, that's when we start to get the big drops. Okay. So it's just being smart about where we are right now in the market of things. And so with my trading opportunity, I still see there's more upside to come. I just believe that here, I want to show you this here. Here's a technique that's going to really help you out. Okay. Here's a technique that's really going to help you in your trading here. Apply one moving average to the screen here, okay? So this is all I want you to do. I simply just want you to apply one moving average to the chart here. And let's do this here. 52 MA, right? There we go, 52 MA. That's what I'm using right now on the chart, one moving average. And this is some of the most powerful things you can use for entries, exits, and momentum. Entries, exit, momentum. This is some of the most powerful things you can use out there, okay? So whenever I'm looking at these markets, I'm looking at, is it a good time to buy? Is there a caution that we might get a pullback? And where is overall momentum? So if I take off all the moving averages or all the trend lines on the chart here, and we can see what we're seeing right now in the market here, right? One thing you'll notice is what? We don't ever get too far away from the moving average before we go through at least a bit of a short-term correction. So even in a very big bull market, right? If I right, as you can see, even in a very big bull market, the market will that'll be the moving average there, right? That'll be the moving average through there. But then what ends up happening, right, is that then the market will do something like that, right? And then it'll get too far away from the moving average, and guess what will happen? Then it'll end up coming back to it. This is what's called price and time with Gann that I've learned from Gann. The Gann analysis is what? When we've done too much price, there's a lot of energy used there. And this is where, like, as the markets get too far away from the moving average, we've done too much movement. We just need a little bit of a correction, not a top, but we just need a little bit of a correction, right? And this is where we use the 52 moving average here. And then it comes back to the moving average. The moving average is trending up. This is the sweet spot to buy, because then we go for another move and then we end up going for another correction there. And as you can see, this is what ends up happening through bull markets and bear markets when we're in this here. And you can see it all through there. So if I bring this up to here, the purpose of me bringing this up to here is that when I say the end is near right now, right, and I bring this up to here, and let me remove that. When I say the end is near right now, that means the move here is getting very close to overextended. And there's a high probability we're going to start to see at least a bit of a pullback here first before we start to what? Before we start to continue. And as you can see here, right, look at this here. When you start to get too far away, we've done too much price. There's too much price. And now what WD Gann talks about, and if you actually go and have a look at this here, that's the free X Factor book that I'm giving away. That's based a lot of the psychology, the trading psychology around that. One of the things that I have learned from WD Gann is that there's things called price and time. And when the market does too much price, too much movement in one direction, then there's a thing called time, where time needs to catch up. And this is how you end up getting the zigzags all through here, right? The zigzags up and down, up and down, up and down, up and up and down, up and down through here, right? So you end up getting these big zigzags from here. And this is where, like, if I bring this up to here, right? This is where, like, one of the most powerful things that I've used in the markets is what I'm teaching here right now, which is the 52 moving average, right? Is when we see through here, right? We can see that we have that through there. Now, let me see if I can. Right, that's the 52 from there. And as you can see, one simple indicator can make the world of difference in your trading. One indicator. Now, again, for me, what I use is what? I like to use the 52. 52 has always been my thing. Now, why not the 50? It's the same thing. It's just where I got the 52 from, the 52 MA from, was I got that back, like, when I first started trading 20 years ago, and I started learning the art of technical analysis. And there is, when I started learning the art of technical analysis, one of my first mentors was named Kim. And when I learned from Kim around technical analysis, this is back 20 years ago, I went to his mentor called Simon. And Simon, he always used the 52. And this is where I started learning about trend analysis and so on and so forth from there. So I started using the 52 moving average. That's where I got the 52 moving average from. But then later on, I found a really successful millionaire mentor who makes millions of dollars per year, still does. The whole thing about what I learned from him was learning about the WD GAN, about price and time, and the market is like an energy source. Meaning if the market just keeps going up, 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 we're using a lot of energy to go up through there. We need a little bit of a resting period. And this is where you end up getting, even in bull markets, you end up getting these pullbacks, pullbacks, and pullbacks from there. So if we ever get too far away from the 52 MA, and again, that's where I got it from. It's the 50, it could be a 60 moving average, right? It's the concept around, if we're too far away, there's a massive probability we're likely to get a bit of a pullback, even an upward trend. Look at it through here. Right, as you can see here, right, we have a move up, we get a bit of a pullback, move up, pullback, move up, pullback, right, and then we go through there. Even through here, right, look at this here, up, sideways, up, then we get a pullback here for a while, up, pullback, so we get these swings. So how we use this, and one thing I want to encourage you to use this in your own trading, is what? If you want to start to flip success on your side, just stop getting into trades. And when we start to get too far away from the moving average, there's a more high probability. Well, there's a high probability we're going to go through a bit of a correction soon, a bit of a pullback before we continue the trend. And if that is the case, and we're going to go down that path, then you just don't enter those trades. You wait for what's called wait for equilibrium. Equilibrium is what? Equilibrium is near the moving average, because as you can see, the best time to enter the trades when we're near the moving average, and then we continue going with the trend, but with the moving average there. So as you can see here, that's what we're using from there, right? Really simple indicators like this can make a huge difference to your trading, right? Now, the thing is that there are going to be times when we start to get pretty extended from the moving average, right? Like we are right now. And this is where we don't want to be too greedy, right? Again, this is why I'm exiting my call options here. Well, I've actually got two call options. I've got an in the money call option, which I bought down the bottom here. And I've got a way out of the money call option up here. This is the one that I'm selling here. So when we're looking at that, or when we're seeing that, this here is going to supercharge everything for you, right? Because we do know, even if the market, if the moving average is doing that, right? And then suddenly moving average is doing that. Let's actually make that blue for representation, right? And then the market does that through there. We may not, right? We may not, oh, it's too far away from the moving average. And then it just keeps going up through here. And you're like, oh man, I wanted to enter here on the market there. That's where I want to enter, and it continued up. Well, the thing is right, we're trying to capture a big profit. If we're trying to capture a big profit in the markets, guess what? We do know even if that does happen, and we do something like this, then we get something like that, right? So you're not missing out on too much of a move if you start to get this balance of it's too far away from the moving average. We're gone too far, right? So this one thing alone has supercharged everything for me by understanding where we are. Are we in a trending environment? Meaning, is the moving average trending up? If so, then we're in a trending environment. So now, if I just go back and take everything off the screen here, boom. Will that do that for me? Oh, there you go. There she is. Oh, isn't that nice? There we go. Full screen. There we go. How cool is that, right? So anyway, back to taking everything off the screen. So as you can see here, why I'm saying what I've been saying right now, meaning I sold because the end is near. I'm selling it all. What does that mean? Once again, we're just too far away from the moving average. Now we can keep going up from here, but making a move, which I believe we're likely to get to 9,000 here, by the way. Making the move to 9,000 isn't just going to keep going straight up, straight up, straight up, straight up. The way that will work is that we have a move up from there, right? This is the 52 moving average, by the way, so we use that, the 52 there. Then suddenly what ends up happening is we may continue up from here, from there to there for a little bit more. But inevitably what ends up happening, then inevitably we end up going through a bit of a sideways correction from there. Bit of a sideways pullback, and then we end up getting something like that, and then a continuation from there. So that's what we're seeing right now, right? That's what we're seeing right now. So I'm actually expecting maybe a couple of days to maybe a week of just a slight little correction, a slight little pullback, and then we're likely to continue this up move from here, because the market doesn't work. Hey, right? The market doesn't. If you just look at see how the market here, you can see just what I'm talking about here, right? So you can see how when we're looking at these markets here. Oh, I said I'll start on the S&P. I'm still on the S&P 500. When we see this here, right, we can just see very simple what the market doesn't get too far away from the moving average. Once again, what is that? That's the 52, right? And if we don't get too far away from the moving average there, then guess what? If we are, then that's going to give you warning signs. And just look at the chart here, right? Very, very, very simple. So for me, what do I like to see? I like to call equilibrium. What's equilibrium? Equilibrium simply means we've had a pullback to the moving average. So we're probably likely to get that real soon, by the way. And then we're likely to continue up. And then 9,000, here we come. So that's what we're probably. Now, I wouldn't want to try to short this market now. No way. That'd be just like if you really want to see your heart do that, right? And then if you eventually want to see your account go from doing okay to like gone, boom, then short the market right now. It's crazy, right? Just don't short the market. Well, you can do whatever you want to do, but I'm definitely not shorting the market. I'm getting out of my long positions right now. So that's what I'm seeing right now on the S&P 500, right? And I see this across the board for all these indices, by the way, right? I see this across the board for all the indices. And so this is the S&P 500. If we go down and look at, say, things like the Dow, right? Same type of thing with the Dow, right? We're in a very strong, is that doing that from there? NASDAQ? Do I have? So even looking at the NASDAQ, obviously the NASDAQ's doing the same thing here. If we have a look at, once again, look at this here. Look at this here, guys. Vertical. Look how far away it is from the moving average. Danger, Will Robertson. Danger, Will Robertson. Right, we're too far away from the moving average. Danger. Not a complete crash, but we're just too far away. We've gone too far. Look at the chart here and look at the last 10 years. Look at what the markets do. What do markets do? We get too far away and then we have a correction. Too far away and have a correction. So the idea is trading for me is not, well, if the market's going to go down, let me short it. No, because then your account will go and it's gone, right? No, you don't want that, right? And if you short it right now, who says this is not going to continue? Then your heart starts to, oh, I hope it goes down. 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 No. Right? Wait. The best situation is what? We're going up. So just wait for a pullback to the moving average and then get going again. And then you're likely to get, yeah, jumped on the next big bull move. And then away you go again, right? As you can see, here we go, here we go, here we go. One simple thing, guys. And the fact is this. This is fact, right? This is not made up to gray area. This is one thing I love about this technique. It is a fact that when we get too far away from the moving average, it's too stretched. And even in very big bull markets, we need the correction time to then continue. The correction time in the markets is fuel for markets, is fuel for the market. It's called, once again, I'm going to go back to the whole WD Gann thing there, right? WD Gann. And again, in my X Factor book here, I talk a lot about that as well too. Plus you also get a free trading course from me. But the markets go through what's called price and time, right? Meaning the market will go up, 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 up like that, right? We have a really big move for a while. That's called price energy using phase. But then just like the reason why the market does this, because then it needs time what? Then now we need a bit of a what's called profit taking, what's called a bit of an energy building phase. Because in a very big bull market, we need these energy using. And then guess what? And then we do something like this here for a week or two, sometimes even a month, right? We end up going through this what's called energy building phase. This is called time, and this is called price. Time is now the market just resting for a bit, refueling, letting the market refuel, and then guess what happens? And then we end up going for the next big move, and that's what makes trends in markets. We go for the next big move here. Because as you can see, even through here, after the COVID, what ended up happening, right? We end up going for very big moves, but we end up getting corrections along the way towards the ultimate target on all markets, right? So if we see a lot higher prices, which I do, one, because the overall trend is still up and there's no major topping pattern here at all. And by the way, if we are going to go down, we'll start to get something like this. We'll start to get well below the moving average. If we're not even doing that, then don't you be looking to short the market there, right? So the whole thing is, oh, by the way, guys, if you'd like to get access to my trading systems, I'm actually running a bit of a flash sale right now. johnsflashsale.com. Go check it out. Now, one of the things here is this, okay? This one simple technique will save you so much heartache in the markets, and also it'll help you understand what's going on right now. Point blank, period. It'll help you understand. And what does this tell you right now? It tells you we've just gone too far. Yes, we're in a very big bull market, but just like I've been saying in my YouTube videos, I sold because the end is near. Just look at this here. So what we don't want to do is we don't want to then start to overlay, which I saw a lot of people do through here. We don't want to overlay our feelings or our hopes, right? Our feelings and our hopes in the markets is going to is going to destroy our trade, it's just gonna our trading account, trading on feelings, right? What I need to do is I need to have something behind my decision to say whether this is valid or not. Is this actually true? But what is this? The fact is this, is that what I'm talking about here, this is one thing I love. Once again, this is one thing I love about using the 52 moving average. Right? Again, for me, it's always the 52 MA across the screen as we're looking at here. And one simple rule is what? When the market gets too far away above, like right now, yes, we're in a big bull market, but we've gone too fast, too much. This is called too much movement, too fast. And then within this is where you potentially do get the sharp corrections and all that sort of stuff happening. Now, I don't know when it's going to end, meaning actually getting the pullback out of this level here, but we do know there's a correction coming. And then we're probably likely to continue the big bull market. Same for the Russell as well too, right? Same for all of these markets. Even though we're in a very big trending environment, look at what the markets do, right? Even in a downward environment and upward environment. And that's what causes the market to go through these swings, right? Because the market is like an energy source, right? Price and time, price and time. And that's what creates these swings. And one of the biggest mistakes that I'm seeing people do is they wait for this move to happen. Isn't she love? Oh, there we go. There we go. There. Right. They'll wait for this move to start. Let me take off the screen there. They'll wait for this move to start. And now, guess what? Now they're looking to enter up here. There we go, through there. Through there. Right. So now what are they doing? Now they're looking to enter up here. Now, why is that so bad? Because remember what I just said, right? When the market goes up and up and up in one very big strong leg, that's now what? That's now in that what's called price phase or that energy using phase. And eventually you're going to run out of energy and then you end up getting a pullback. That's why even through all these big bull markets, we end up getting, and that's what creates the swing. Energy using, energy building, energy using, energy building. And this is where like a lot of traders right now are starting to enter long here where they don't even realize this one simple thing is what? When the market's gone up like this too much, it's now a really bad time to enter the markets. A really bad time. And now they're entering long here. And what do most traders experience? Most traders will go long right now, hoping, is it going to go up? Hope it keeps going up. And then the market has a big correction against them. They're like, oh, market's rigged. It's all against me. It's not going to work. Oh, my goodness. And you go down this path. Like, no. Understand the markets like this. One simple thing can really help you. And it's just, and it blows my mind away that a lot of people now, what they're focusing on what Trump's doing and the Iran's doing and so on and so forth. But this one simple thing, what was that? Right, this one simple thing is going to really help you with your trading here. So just use it, guys. Right, just use it for your trading and all your trading. When it comes down to that, all through there, it is one of the most powerful things out there. And once again, guys, I'm about teaching you truths that you can use for the rest of your life, even if you do nothing with my business, right? So even if you don't, like obviously I have the free X Factor book that you can get access for free. That's based on how to actually generate the X Factor in the market, right? You know, or you might, even if you don't do things like with my elite coaching program or the John's flash sale there, even if you don't do anything from there, anything with me at all, I'm trying to give you this technique here so you can use for the rest of your life, so you can get a much more understanding about these markets of how they actually work, and therefore we can actually start to make better trading decisions. One of those things is if I'm looking to go long the market, I want to get it near the moving average, not too far away. Because if I want to go long the market, the best time to wait for it is wait for a little bit of a pullback to the moving average, and then we can start the next leg up. Wait for the pullback, wait next leg up. because we do know the fact is that when we start to get too far away, entering up here long is very risky because we're likely to go through a bit of a correction, a little bit of a pullback, and then you end up getting something like that, and then you end up getting then the next move up. So it's just so incredible from there, from going down all through there. It's just really amazing from there. So let me do this here. So if you guys do have any questions at all, guys, put them in the chat box there, and I'll make sure I get to them at the end of this session. I'm still on the stock market. We're going to continue on here now through the other markets here, but I wanted to give you this foundational principle of what I look for in the markets here. And why don't I add that there as well too, right? Do that thing for me. Is I'm here to give you these, these foundational principles that you can use across all markets to help you when it comes to these markets here and what's going on there. So that's what's happening with the stock market. And once again, guys, if you do have any questions, please put them in the comment section or anything you want me to cover. And I'll make sure that I cover them from there here. But please apply that to your markets there. Please apply what I just taught you there, guys. And I promise you're likely to start to do really well in your trading from there. So let me just go to bit of a break time here. Just give me a sec, guys. I'll be back in 1 minute to continue this. Alrighty, I'm back now, guys. Let's continue. Oh, let me stop you from there. Alrighty, so let's continue into what we're seeing from here in the marketplace from here. Abdul. Can't see the chart. Okay. There we go. See. Oh, I better turn that banner off. Hey? Better turn that banner off from there. Let's go to, let me just make this a bit bigger here. You guys have got any questions, guys, please put them in the comment section. Please put them in there, and then I'll go through some questions, and then I'll get back onto the session here. Let me go through some questions here. Seeing the chart reject and not all-time highs yet, but NASDAQ, your opinion? Nothing there, nothing. It's still very strong to the upside. So I see this market likely to be continuing up very, very strongly from here. Very strongly from here. So I wouldn't want to be trying to go against these markets. If I go to check out the actual Dow itself, this is the Dow itself here. So, and if I, and this is the weekly chart here. So I wouldn't want to be going, I wouldn't want to be short, but I don't think we need to read into it at all. Dow has just been very strong. It's actually almost at all-time new highs. So I don't think there's anything to read into that. I think we can start to say, we can go down the path of trying to add an opinion to it, right? And the opinion would be, well, the Dow Jones is not making an all-time new high, but the S&P is, and the Dow is, and so therefore that means, and we're going to insert an opinion. What is the problem with that? Is that opinion based off facts or data points that we can actually then rely on, or we're just coming up with some sort of story? And a lot of the times it's just a story. There's no sort of data point behind what's likely to go on there from that there. Let me go to the next question here. This one right here. I know you were saying you think oil will pull back, but I believe tensions are still close to possibly breaking out again with oil. A correction of big calls and puts. Oh, a correlation of big calls and puts occurring every rise and fall. Maybe that's so. Maybe that's like, yeah. And if there is a lot of calls and puts with the oil market, and let's actually go to, let's actually then go to oil right now, and we'll bring on. Right, let's actually go to oil, and let's actually check out oil here. So I'll show you this here, right? So from a standpoint of what I'm seeing from here, I'm just seeing from an analysis point of view. We end up getting the big move up, as you can see. We end up got a move up towards those highs up there, and then now we're through here. So one of the things that I'm looking at myself, there we go, boom, right? One of the things that I'm looking at myself is this here, is that I am just seeing that that I'm actually expecting a bit of a move on the downside, or at least this thing just holding here. As you can see, what we've been doing here now for the last couple of months. So just because the thing is this, is that we don't want to go down the path of thinking just because there's tensions that is going to mean let's insert there. There's still tensions right now, right? There's been tensions in the marketplace for quite some time, meaning with Iran. But why have we had these big drops from here? So that's the thing that we want to look at, right? We want to say, okay, then here. Now, I wouldn't be making a decision based off that, because there's no, like, again, if I'm looking at the actual what's been happening, there's been a lot of tensions in the last couple of months with Iran. But why have we not continued to go up? That's the question we must ask ourselves, right? Because if that was truly going to affect us in the marketplace, then we would what? We would actually start to see oil continue up. It's just the thing, right? It's like, okay, if this is true, meaning if tensions arise, then oil go up. Okay, that thought, let's actually stress test that thought. We stress test that thought by saying what? We stress test that thought, and let me just bring this up to here. We stress test that thought by saying what? Okay, well, what's happened in the last couple of months? Well, there's been a lot of tensions, right? There's been blowing off, on, straight, open, close, open, close. We know that to be true. So if we know that to be true, right, and the mark and oil has basically just stayed steady around the mid 90 level. It once got slightly above, a few times above 115, but most of the time it's been there. If that thought was, if tensions rise, oil is going to go up again, then it would have oil would have been continuing going up, because the last 2 months have been nothing but tensions within Iran, right? And so that thought is not actually true, is it? Because if the thought was true, then we know that, okay, oil should be at 130 right now. It should have continued up, not just do this here. Now, oil can keep going up from here, but I don't think we want to say because tensions rise, market goes up from there. And so that's the way that I'm looking at oil myself. Again, I don't know exactly what's going to happen with this oil situation. What I do know, though, is that if we do end up seeing another big spike in oil, then that's going to cause a lot of problems in the equity market. But as you can see here from if I blow this chart up to here, this is the chart here. This is the weekly chart here, right? This is the weekly chart of oil. And let me just bring this up to here, right? There we go. So this weekly chart of oil has just done, this is where we've been here for last, even with the 08 crisis, right? So we've been in this phase here for quite some time here. That was the bottom through there. There was a bit of a triangle breakout through there. So I don't see why right now. By the way, we've been this situation with Iran is not a new thing. I hope we realize that, right? I hope we realize this situation with Iran and oil is not a new. This Iran situation has been going on for a long time. So that's all I say there. I don't know exactly what's going to happen. So therefore, I can't make a decision. I can't make an actual trading decision based off that. Because I promise you, if I started making a decision based off just an idea from there, that's what my heart's going to be like. Am I going to be right? Am I going to be wrong? I'm trying to have a guess here. I hope I'm right. And then more times than not, what ends up happening is that you end up just like, your account just gets obliterated because you just trade off this idea. And a lot of the times the idea wasn't even true. So there could be like, not sure. The thing for me is I want to use things that can actually help me do really well. And one of those things, once again, going back to actually trading the markets, is just by simply, and we talked about this before, every single market, even oil, as you can see, every single market operates the same way. Is that if we ever get too far away from the moving average, we've gone too far. We've gone too far there, right? And then when the market has gone to, even in a very big bull market, as the market's gone up through here, as you can see, went up, that'll make your heart start to like, yeah, I need to be stepping aside from here, right? So that's the whole thing about trading. Is there's a lot of opinions around oil. I don't know definitely what's going to happen with oil, but all I do say is we want to stress test the thought whether that's true or not. That's all. And then secondly, I don't want to be making a decision based off that, because most of the time I'm going to be wrong. I can make an opinion right now. But look, this has been the and if I actually look at it from here, right? This has been oil here for all this time. Really? Like, I can take this off the screen and I can take this off the screen here. So we could actually potentially have maybe another new trend line coming in place. So that could be something through there. So there may be a breakout of oil coming soon and new highs. What I'm doing here right now is I'm making a big guess, aren't I? It's like, well, I don't know. Now, maybe with inflation coming down the road, we could get a big spike here so Yeah. Let's go to I guess who knows? We aren't the banks. It just seems from the Dow that US indices correction coming. Well, the Dow's not telling you that, is it, Abdul? The market's telling you that. The Dow doesn't tell you shit. Oh, let me take this off. There we go. That's better. Right? The Dow doesn't really tell you anything, does it? The Dow's not telling you that. A correction coming will come off what? What I'm teaching you here right now. And that is very simple. I'm teaching you something that's a fact. Look at the chart. Look at the fact here. Look at this chart. One moving average, 52. And whenever we do get too far away above the moving average, we go through a bit of a correction. That's why our correction's coming. Oh, and we can go down the path there. So that's all. It's just as simple as that. Boom. Yeah, but true, there's been a lot of manipulation. That's true. Well, there's always manipulation, right? The whole market's full of manipulation. But that doesn't mean we can't win at the game of trading. There are things we can use to give us the advantage of out there. And one of those things is not taking a trade based off a guess. Like right now, there's a big guess around oil. I can't make a good decision just making off a guess, right? But if I use the techniques to give me a probability of something happening, then I can utilize that. So that's where that becomes involved with that situation. And that's all it is. And remember, we want to have a successful trading career, right? So we must make decisions. If we're going to make something up, then it's not good. But if we can use these things to really help us, then that's when we can start to do really well at a trading there. That's all. Let's go to here. John, thank you for clarifying in your video yesterday that the reason you had the title caution of sell everything is because you had options expire in July and that you're still very bullish. Yeah, my man. Of course I am. I still have a 9,000 target. On the market and expect the S&P to go to about 9,000. Yep, I still expect that. I've been following you for about 5 years, more on than off, and learn a lot from you. Fantastic. I thank you for all your help and your commitment to helping others. I hope one day I can become part of your coaching classes. It's basically closed now anyway, so you can't really get access to it much now anyway. I hope one day I can become part of your coaching classes. I do work full time, so it would be hard at the moment. Well, I give away plenty of free stuff anyway. Like, you don't have to buy anything from me. Once again, if you go to this right here, as soon as you get access to the book, literally, I'm not sure if you guys realize this, but when you get access to the book, for 2 weeks, I have emails set up for you to go out. The first 5 days is trading course, different rhythm, understanding rhythm markets, my trading systems, understanding trend analysis, stuff like that. But then I also give you access to the actual book itself. So it's just incredible there. So you don't have to buy anything from me, but there's just a lot of free stuff that I give away. You can utilize that there. And that's all trading is, right? Like, trading is what? Really, this. See this point through? See that through there? See that there? That right there. Discipline, strategy, consistency. So I have a strategy that you're using, which is just patterns that we use on the charts. And that could be as simple as what? That could be as simple as when the market gets too far away from the 52 moving average, it's the worst time to buy. When it gets to the moving average, I'm looking to buy. It could be as simple as that, right? As simple as that. So that's all it is. That's what that means. That's what strategy means. It's something as simple as that. And that one thing has helped me so much by giving me a good understanding about these markets right now. I know what's going on in the markets right now. There is no confusion. We're still in a very big bull market. Check. We know that. That's a fact. And we've had a very strong move to the upside. Check. And thirdly, it's gone too far. Now we need very soon, we don't know when, a bit of a correction, a bit of a pullback. Now, again, we don't know if it's just going to be, you don't want to short the market because this can keep going up and it may not even just go down. It may just go sideways for a while and you're left. We're going to go, like, don't short the market right now. It's crazy. Right? Because again, you might short the market and it may just go sideways for a couple of weeks. And then guess what ends up happening? Gone. Your account gets blown up again because you're going against the big momentum. See this big momentum here? There's a very big, strong momentum here, right? Look at all that momentum there to the upside. Don't go against that momentum. You can't even see the charts there. Let's go. Oh, fantastic. Thank you, man. I appreciate that. I appreciate the insights and you are speaking good sense. Fantastic. And that's all it is, right? That's all it is. And the most important thing is that this one here, the trend is your friend until the end. My man, the number one thing is this, right? There's a lot of guessing trades we can do. And then there's a lot of what we call setups patterns that tend to repeat. And again, I'm just going down to an example of one of those patterns could be if we're looking to go long, even in a very big bull market, and we've gone too far above the moving average, there's a high probability we could be getting a bit of a correction soon, a bit of a pullback. And that pullback can last a few weeks or more. So we know that's the worst time to be looking for a long trade. The best time is at least wait for a bit of a correction to the moving average and look for a long there. You're going to have a much better chance, right? So that's all it is. That's all trading really is. It's just using things like that on a repeatable basis to make good decisions. All market strategists are predicting 7,500. We're basically there right now. So that's not really a prediction, is it? We're there now. It's like, yeah, we're going to 7,500. We're going to a 7,500. Here we go. Oh, look. Yeah, 7,500. We're there now. So, John, you're a good man. Really appreciate you. I do see it. Boy, are you right. Oh, there we go. Righto. So let me just go through now. What I want to do is let me have a bit of a break here, guys, for a minute. And then bit of a break time, guys. And then I'm going to going to continue on here with the markets here. I just need to have a bit of food here. I'm starting to run out of energy. They want to trap liquidity at the top. Are you talking about the stock market? I wouldn't say that. If you are talking about the stock market, that's a big guess, right? It's like, I just think we're in a very big bull market, and like what you said, right? This one here. The trend is, if you are referring to that, I'm not sure if you are. What am I eating? Oh, are you asking me what this is here? I am eating right now. So it's early morning for me. It's 7 o'clock in the morning for me right now. So it's 7 o'clock in the morning for me right now. Obviously been looking at the markets and the charts and stuff like that. We'll get back to them, gold and silver and stuff like that in a minute as well. So I've had some eggs this morning, and then now this is actually called a Go Bar from BPN Nutrition. It's from a guy called Nick Bear, and this is just a quick little sort of carb energy source. It's made from oats, so it's an oat bar, and it's just pure carbs. That's all it is. So this morning, about an hour or so ago, I had 6 whole eggs, and then obviously got into the markets, and then now I'm introducing a bit of carbs now. Since being up, I've been up since 3:30 this morning my time. It's 7 a.m. in the morning right now. So just need to make sure I do that. Especially, I'm not sure if you know RK777. I'm not sure if you saw wonder if they make that in the US. Oh yeah. Well, this here is actually a US brand. I actually have to get these shipped from the US, which I pay an extraordinary amount of. Actually, no, that's not true. I buy them from Amazon. You can buy them from Amazon. That's where I think that's where I buy mine. Now, for me, RK777. I'm not sure. Did you end up seeing one of my recent shorts that I did? I did a short yesterday talking about how many kilometers I did running and stuff like that. I'm not sure if you did see it. The purpose of me saying that is I'm a runner, right? So I've done 50 kilometers total this week, from Monday through to today. Oh, you did see that, right? So, RK, did you see how my Garmin that I showed you, my watch, it showed you I just completed a 20 kilometer run over 2 hours, right? So that was yesterday, which is my longest run I've ever done, by the way. It's my longest run I've ever done. And as you can see on the Garmin watch, I've done almost 50 kilometers of running. This stuff here is a game changer. So if I want to go for a run, but I don't want to have, I don't want to eat a big bowl of oats, right? I don't want to eat a big bowl of oats because then it becomes heavy on the stomach. But stuff like this, if I eat it, literally within 20 minutes, it's digested. It's very light on the stomach, and it's a good carb source to then utilize for that. So that's one of the reasons why I like this here. So for example, today, right? I don't want to have like a big bowl of oats. I can eat a big bowl of oats. And there's nothing wrong with that. I think it's amazing what you do. Incredible. Oh, thank you, man. Thank you. And that's all it is, man. That's all it is. It's just a really good carb source. If I'm just looking for a carb source only, then that's what it is. And again, for me, I've already had my protein this morning. So, yeah, they're amazing. Okay, are you running yourself? Are you in fitness yourself? I'm guessing you are because it seems like you resonate with the stuff that I do. By the way, my legs are absolutely on fire right now. I'm all banged up big time. Glutes are on fire. Achilles heels playing up. It's like an old man this morning. Oh, nice. I guess that's why you resonate with me, right? It seems like you resonate a lot with me because who I am as a person, I'm very big into the markets, but also very big into the actual fitness side of things. So I guess that's why you resonate a lot with me. So appreciate your support, man. Appreciate your support. Oh, but isn't that interesting, RK? You come to me for trading stuff, right? Charts, markets, stuff like that. But now because I'm just sharing who I am, I'm now indirectly helping you get motivated again to get back into it. Isn't that pretty incredible that way, right? I'm just sharing who I am and what I'm all about. And that's the reason, and that's the reason why I did the short yesterday, because I want to share more about my life, what I'm actually doing outside the market. So I wanted to include that into that thing there. And the reason why I'm doing that type of running, by the way, is because in just under 2 months, I have my next High Rocks race. Okay. So that's why I'm doing that much running. So, but if you want to get back into it, just start with 10 minutes a day. You know what I mean? Like, you don't have to make like a big, please don't do a 2-hour run like I did yesterday. I'm a fitness fanatic. Right? I'm a fitness fanatic. I did 2 hours of running yesterday. I am completely bunged up right now. May not seem it, but I am just like lower back's tight, glutes, Achilles. It's like crazy. So anyway. What's a live stream, man? Just a live stream? Just me hanging out? Oh, nice. Say please. John, do it now. All right. So let's go to. All right. My boys are lucky. All right, let's go to here. Let's turn you off. How cool is this, eh? How cool is this? Okay, let's go to Thrifty. It's all good, my man. It's all good. All right, so let's actually go to here. Let's go back to the markets here. And let's bring on John, pull up this one here. Okay, cool. Let's see, can I do this? And then like that. Let's do this here, right? Let's do this. So we're going for what? We're going for SRPT. SRPT. Is it this one here? Is this the 150? What did you want me to look at with this one here? I'm just not too sure about what you wanted me to look at with this one here. It's definitely been beaten down big time. This is the weekly chart here, by the way, to the left. Daily chart to the right. I just saw sideways movement. Oh, Thrifty, my man. Are you talking about my channeling, my pattern that I talk about when the market goes sideways for quite some time and then has big moves? Is that what you're talking about? Referring to that sort of pattern? Yes. Now, let me ask you a question, Thrifty. Are you referring to A, this, or B, this? B. Okay, cool. Okay, let's actually do this here. How long has that actually been for? Yes. Good job, my man. Good job. I'm proud of you. You get this one. Yeah. I'm saying good job because, yes, I can see it now. Ba-bum. And then ba-bum. Now, what I'd be looking for is, so that's a channel. Been watching and waiting for this. Now, Thrifty, do you remember? Oh, I'm not sure because you've come in a bit late here. So I've talked about it a few times in this session already, but I'm happy to repeat it again for you, my man, to help you out. Do you remember on any of my videos me talking about the channel projected target? I call it that, where you use the channel to then project up to find the target. I call it a channel projected target. It's just the name that where you measure from the high to low, so to speak, and then you find. Have you heard me talk about that before on some of my YouTubes? Yes, absolutely right. So then beautiful. So then therefore, if we do that, if we do break out, firstly, I can see there's a big gap up here. And actually the gap is more there. So that'll be the channel, right? And then what you do is then you take that and you project that up from there to there, as you can see. And then if I bring this down, isn't that a quinkity, okay? Meaning the projected target, if we do break, then there's a high probability we're likely to get to that target up there. And if we squeeze out, then that'll be that level there. So that's what I see happening with that, man. Really nice. It'll definitely be what's called a shorter term move. I wouldn't see it from a big picture move, but that's been going. What have we done here? Is that one? Can I use this here? Oh, I'm trying to get. It's not giving me that there, but anyway, we're going from basically June to where we are now. So almost 12 months worth of time, almost a basing pattern. So, but the problem with this one here, Thrifty mate, is you never want to get in now because yes, I believe we're going to get a breakout. But remember, the breakout could be also down, right? We also could go down and have a break and then end up having a move on the downside. And therefore, the target would be more like be more to the downside. So we haven't made the breakout yet. So we could be making a move to the downside there. Which, by the way, it's very interesting to see that since we're at that level through there. So, but there is a big gap up here. There's a big gap up here as well too. So yeah, but that actually looks quite nice. And I also like Thrifty mate. You know, I also like what's called the L-shaped pattern, right? And we're getting something similar to that now as well too, right? So we've had this move up, and now we're getting that. So if we get a nice breakout, we could actually start to see a nice move up towards that level there. So I really like the fact that we're here and we're developing this small little sideways bid here for the last month or so in this one here. So this one here is 12 months. This one here is about 1 to 2 months worth of there. So these are the ones that typically have big moves off there once they get going. And but the problem is that sometimes these things can last a lot longer than we think. That's why we always want to wait for the bit of breakout. And a bit of a tip as well too, my man, is I'll show you this here. So a bit of a tip for you is that what I like to look for after these patterns is I like to see breakouts, but with a really big volume spike. You get that, and there's a high probability the big boys are coming back in. I'll show you this here. So let me bring on the volume here for a minute, and let me bring on FTAI, because this is the trade that I did at the start of the year, right? So if I bring this back up here, this is the trade that I did at the start of the year. So what did we have here, right? We had what? We had this sideways pattern here. And then we had the sideways pattern there as well too. So that was roughly around that. That was the sideways. But look what we have here, right? Thrifty, do you see how that volume was actually pretty big at that time? If I actually bring in that See how the volume was actually quite large on this one here on the breakout. After that, that's what made this actually have this move to the upside from there. So that's a bit of a tip to give you a high probability of actually seeing a good move off these patterns. And this is a trade that I did at the start of the year. I picked up 300% return on this one here. So my entry was on the breakout, just like I'm talking about right now. Went up. When the market pulled back, I decided to exit my trade here for 300% return. That was an option trade for me at the start of the year for me. So there you go, my man, and it just works. And thrifty, you know what the most amazing thing about this is? All you're utilizing is just the chart itself. There's nothing else involved with it. You know what I mean? It's just a simple pattern. And here's an example of a trade that I did just this year. And when it works, they tend to work really big. And it gives you a good win-loss ratio. Should I say, it gives you a good win-loss ratio, but then also you end up having these, if you get in here and if it gets below back in, that's your exit point. And that's your profit potential. So not only do you have a high win-loss ratio, but you end up having, in this case, a lot more profit, 3-4 times profit if you're just buying it. The thing for me is I know I actually got out at 300% return. So if you utilize, say, a $10,000 trade as an example, a $10,000 trade, the profit actually was, in this case, me, it was actually a lot more than 10,000, but I'll just use 10,000 is $30,000. This is how I trade anyway. 30K in profit, but the same 10 trade there, I know my average loss is around 30%. That's roughly around there. Maybe a little bit bigger, but roughly 3%. So that's actually $3,000. So on a trade like this here, I'd risk, say, $3,000 on a $10,000 position. Well, the exact numbers I did was a $30,000 position, but I'm using a $10,000 position there. But do you see how that works, Thrifty? I want to be able to get opportunities that gives me the potential of doing this. How can I risk 3 to make 30? I could have a 50-50 win-loss ratio and still crush it that year. Make sense? So that's how I win at the game of trading myself. It's not that I don't have losing mistakes, losing trades. It doesn't mean that I don't have consecutive losses in a row. But this is a real example of the actual real numbers that I got out of at 300% return. And this is the reason why I liked it. 300% return on the option. It lasted about 4 to 6 weeks from memory. And my risk was roughly 3. Call it a big loss would be $5,000. Right now, for me, I actually had 30K on it. Right, so 30K, the profit was for me 90K because it's 300%. So that was the profit there for me, 30K, because that's what I trade most of the time on these trades. And therefore, that was the profit there. And the loss, if I had a loss, a big loss would be 50%. So therefore, I know that I'm risking on a big loss would be 15K. So 15K, sort of a big loss, maybe even around 10K on 10 to 15K would have been the actual risk there on that. And then, but I look for these opportunities that has the potential of making a big move. So I'm risking this to make this here. So I hope you can see, Thrifty. This is how I win at the game of trading. Because sometimes I'm gonna have losing trades and so on and so forth as well too. But this is how I've been happen to do really well as a trader. But I don't trade a lot though. I'm just waiting for these opportunities, and then through the year, I end up having a really good year because I've had these opportunities. I've had my losing trades. I've had my bit bigger losing trades. Even some mistakes, and then I've had these opportunities where I've had really big moves, and then at the end of the year I've had a really good positive year because I've set the game up to win that way. And this is where income trading strategies are so hard because they're so limited, right? We're trading these strategies that's like a limit in the market there. We're limiting ourselves. which is not a good, which is not good. Anyway. On these short type of trades, do you typically still get options for a few months out? I'm still learning. Oh, it's totally up to you, man. It's totally up to you. You know what I mean? Like, I can't really tell you what to do there, but that's you need to understand why you're doing something there. But yeah, I still like to buy plenty of time myself. I'd rather have too much time than not enough time. When I don't have enough time, that's when I end up getting big losses because of haven't bought enough time. So that's the whole thing from there. Okay, mate. I'm back to you, man. Regarding the market, John, you made a comment that you got in at the bottom before the recent rally in the S&P. The question is, how can you pick the bottom? I remember you were saying you can't pick the bottom since the market can fall further. Didn't you wait for confirmation candle? Well, that's the thing is this here. Okay. Is I'm not trying to pick the bottom. I'm not trying to time the bottom as well. Or with the S&P 500, I'm going to walk you through this here, right? On the S&P 500, on this drop through here, I don't know when the bottom's going to be in. Okay, all right. So I'm not trying to pick the bottom. I'm not trying to say I bought the very low here. Okay. What I do in these situations, right, okay, is this. I say, in these times, I don't know when the bottom's going to be, but in 1 to 2 months from now, we're likely to be experiencing a really big rally. And within that, I'm likely to do really well from the trade. I'm not trying to time the market. So I could have bought, well, by the way, for me, I actually bought back here. So I did actually buy the bottom there, and then the market rallied. But let's just say, for example, I didn't. Let's just say, for example, the market actually had a bit of a drop and I bought here. I didn't get the exact bottom, right? Okay. Now, this is where, like with option trades, which I did, you buy plenty of time to allow this to happen. I'm not trying to pick the bottom. Oh, my goodness. The market kept going down for another week. And then when did this here, right? It did that through there. So it kept going down a little bit more. I'm not worried about that myself with these situations. So I'm not trying to pick a bottom at all. I'm not trying to find this is the exact bottom. I don't care about that. The market can keep going against me for another couple of weeks. I'm just very confident in these what's called maximum fear times that I may not get into the bottom. And even if you did the exact same thing by getting the here, you bought here. And then literally over a month has gone past, and that's what's happened to the S&P. And then another couple of months later, you've gone from there. You bought it here, you're selling it up here 2-3 months later for a profit. You see the mindset around that there. Okay. I'm not trying to wait for the perfect timing. I just want to be involved with it. Sit back, wait a few months, like we're doing now. For me, I actually bought it here. And then now that patience pays off, and now the market's up here, and I'm getting out of my options for a really big profit right now. So I hope that makes sense now. There is no confirmation candle within this type of setup for me. I'm not looking for the breakout candle or anything like that. This type of scenario for me is just that. So it's different from an actual trading setup, L-shaped trading pattern, breakout bars, volume increases, stuff like that. This is a different type of scenario where I'm utilizing the fear in the marketplace to experience good opportunities. And that means when we start to get to the, all that simply means, I learned that from you, wait for confirmation candle to the upside. Yeah, but just remember, confirmation candle comes off the back of the actual trading system itself, right? That's the confirmation candle. So we need the setup first, L-shaped pattern, whatever, or the sideways pattern, and then the breakout candle. That's the confirmation, yes. But in the result of looking at the market just recently, it wasn't utilizing that. It was utilizing a very strong bull market with extreme fear. And when that happens, we typically get a rally. Now, I don't know when that rally is going to happen. So I'm not trying to wait for a breakout candle. I just want to get in as the markets come back down and we're into extreme fear, just like we've done both times here. That was November. That's what this is right now, right? And there we go. And as you can see, even from here, right, from there to there, which as the market came down from here, we actually did end up getting a nice little rally there for a bit, and then it pulled back, and then we got another big one through here, and then we're getting a nice good rally. So it's just that's the system within that. I hope you can see. Whenever we get this really extreme fear readings, we typically get a rally a few months later, and then that's how you take the trade off the table, and you say thank you very much. You do your little short the market, but those who did short the market are like this, and they're that, and then they're that. And then they come on my YouTube channel and give me shit. That's like, so that's all it is. So yes, what you're saying there. But you were confident because of the fear and greed and express. Yes, exactly. Yes. Well, I'm confident because if I look at the weekly chart, which is the most important chart to me, we're in a very big, strong upward trend here. Very big, strong upward trend. And one of the things is, RK, is that whenever we do get these extreme fear readings, the bottom may not be in then. We may still have another couple of weeks of down move coming. But typically what happens is that now becomes even more extreme fear. Yes, you didn't get the bottom, but within 2-3 months later, that position is now paying off, and you can just like I did here, right? Okay, makes sense. I didn't get the bottom, meaning I bought November last year, but I bought plenty of time. And then I withstand this actual drop, and I stayed in because I saw this happening. And then what ended up happening was, yeah. And then now, so what I do is I waited for the rally. I've got the rally. Now I'm taking it off the table, made a lot of money. On to the next. Or actually not onto the next. I'm in other trades right now, which are pretty awesome. 50, mate, are you still around? If you are, I just saw this thing here. Let's bring this up anyway. IRR. IRR. There's nothing here. They're coming up. Then you have to wait for another situation where you have to wait for an upside candle, correct? No. For me, in this, oh, that meant risk reward. Okay, cool. I understand. Okay, cool. Yep. So no, what you want to do is you want to develop rules around why you're trading, right? Okay, this is the big thing for you, man, right? We need to develop rules. The rules for me in this situation where we're in a very big, strong upward trend here, we're getting a correction in this environment, the market's coming down into extreme fear. Typically when that happens, within a few months of that happening, we're getting a very big, strong rally, and I can typically make a nice little profit out of that. Now, there's no guarantees, right? So we never want to just load up the boat. So, but it's all about what I'm teaching you here, right, RK, is that you need to take what I'm teaching you here and then develop rules around this type of trading, right? That's what trading is all about. When you want to take what I'm teaching you here, then develop your own rules around that. For me, no. Market's an upward trend. We're getting a 10 to 15% correction. We get the extreme fear reading. I'm in. I'm not waiting for up candle. I'm buying, which I did. And then I may be wrong. It may continue going down for 2 weeks. Or well, I didn't pick the bottom. And 3 months later, the market's rallying, and now I'm getting out for a profit. It's as simple as that. There is no, we're in an upward trend. We get a 10 to 15% correction. Fear and greed index goes to extreme fear. I buy it, goes up, down, against me, whatever. Don't care. And I'm very confident within a few months later, it's got a rally. And within that, I can get out for a profit and then continue growing my account. That's all it is. That's all it is. All right. Let me just take off here. Bit of a break time for a minute, guys. And then I'll get into these other ones that I want to talk about. The gold market, and then TMF, XLE. I was on the title as well, too. Don't you know how to spell, man? Don't you know how to spell? Look at the title, John. It's the fear and greed index and the moving average uptrend, correct? No, different. RK moving average is just looking at the markets, right? But what I showed you a minute ago, and I've been talking about here, I haven't referenced the moving average at all. This is where you want to chunk. If you have different types of trading approaches you can use throughout the year, this one trading approach is this here, black and white. We're in a very strong upward trend here, chart, not moving average. That's it. We're going through a bit of a correction now, 10-15% correction. There's a lot of fear in the marketplace, the extreme fear readings kicking on the fear and greed index. I don't care what the moving average is doing at that time. And within that, it's typically a good time to buy. Obviously, there's risk for everything, so you don't want to be stupid with your risk. And typically within that, within a few months of that happening, it rallies and you can get out for a nice little profit most of the time. Obviously, there's no guarantees. But I hope you can see, RK, is that we need to break things down into systems, right? That's a system there that I just told you. Upward trend, correction for 15%, lots of fear, good time to buy. I don't care what the candle's doing. There is no confirmation candle. Let's get in. And within 2, 3, 4 months later, we're getting a nice rally. And within that, I can get out of that position for a profit and then go on and continue with my other types of trading setups that may need the moving average, the breakout candles. Does that make sense, RK? So we want to put things in the baskets of systems. This is one type of trading system that we can use when it presents itself throughout the year. Hence right now, hence why I'm making good money right now from this rally. Very, 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 very simple. It's actually. So let's actually go to TMF here, right? So oh, Thrifty, you think I make a lot of money from YouTube ads? It's like $10,000 a year or something. It's like I make 10 times more than that in one good trade. Ad revenue, and I don't get a lot of views anyway. So all that ad revenue, wouldn't be able to live off it. Thank God I'm a good trader. And I've only got about 15 or so people in my coaching program, so I don't have a big coaching program. So thank God I'm a good trader. I know. But I've turned into professional. There you go. How Enterprise Capital. Isn't that cool, eh? Let's actually go. You said something up here. Let's actually go to TMF. TMF. Do. So you said, let's actually go check out TMF here. This is the one that I'm in myself as well too. I'm actually currently underwater. But that's okay. It's not a... I rebought my TMF options on Thursday, 36 January 15, 2026. 2026? They're expired, have they? Uh-oh. It's gone already. It's gone. That's like disappeared. It's gone already. It expired even before he bought it. They took your money and then it disappeared. What's that? What's that South Park joke? What's that? The South Park joke? And they put it in the market and it's gone. So I rebought my TMF options for Thursday, 36. So yes, same for me, what I have done. Now, just so you know, Thrifty, I have two positions in TMF right now. I have a very large bought position because I don't know, my timing could be off. So this is the way that I'm doing this here right now. I have a very large bought position in TMF because I see TMF. This is the weekly chart here on. You can't even see it. I see this thing turning over soon and starting to have a rally. Now, this is a weekly chart, right? So it takes time. So the thing for me is I have two positions in this market here right now. One position is I bought it with a big, larger position. We're talking like a real large position because I don't know. I may have to wait 2 years for this thing to play out. I mean, I have to wait. I'm not saying it's going to take 2 years to start, but it may take within the next 2 years. That's what it might take there. That's the first position that I have. The second position that I have, yes, I also have a January option as well too, but that's a smaller position for me within here. So that's how I'm trading it myself, Thrifty. You're exactly right. I haven't rebought anything. I've always had a January option on TMF. I'm currently underwater on that there. Meaning I'm down over 50% or something like that right now on my option. Because I bought back in here around the 40 and it's continued down ever since. So that's where I'm at right now with it all. The options may be question mark. My bought position, I'm really confident in my bought position. I'm really confident within the next 2 years, we're likely to see a very big rise in the bond market and a drop in the rates. And when that happens, the patience within that is going to be. Thank you. Thank you for your patience. And then we go from there. So, but looking at the actual chart pattern itself from this weekly chart here is, let's see if they will do it for me. So again, this is the overall pattern that's happening right now. So we did actually have that through there for a bit, and then we've got that through here. So that'll be what I'm looking for, what I'm looking to. $90 call option? No, that's crazy. I'm one of the things, Thrifty, like the same thing for me, Thrifty, right? An example, doing way out of the money options, and I can see I had a crazy $90 call option previously that I got out of at break even. One of the things that I want to share with you, Thrifty, is I did the exact same on the S&P, by the way. I bought a really large position on the S&P 500 when I got into the S&P 500, and I bought a large position in the money. That in the money trade right now is around about 100% return on that trade on the S&P 500 right now. The way out of the money is still down like 90%. The purpose of me saying that there for you, Thrifty, is that I've always just what we're experiencing here. It's always best to buy at the money, in the money, or just slightly out of the money. You know what I'm trying to say? Around about where the price is. If you ever try to go for those cheaper options, most of the time you can say goodbye to it. Just like I've experienced now. I did the exact same on the S&P. I took a small position on way out of the money, and that's crushed. And I took a large position on in the money option there. So but I do see once we start to get a breakup from there, and this is obviously going to follow the TLT market as well. This is the TLT market. This is the one that obviously, again, weekly chart here. So this is the weekly chart now on the TLT market. One of the big things, Thrifty, that I'm watching for, and you may know this from some of the videos I've done, but I'm personally looking forward to see if we hold here and we start to break up above here. Then that to me is going to be the trigger to see this thing move up. Because typically when we get these descending triangle patterns and then we get the breakout from there typically starts to see a really strong move. And then this is where we could start to see the bond market really come up to about that 100 level on TLT. And then that should represent TMF getting up to around about that 60 level up through there. Now it takes time, right? It doesn't happen straight away, but that's what I'm looking at right now. If we do start to get a break up through here, for some reason, if it does start to move up through there, that's where it all happens from there. So, yeah, so. Um, are you talking about? Okay, are you talking about? Was it this one here? That is so awesome, man. Was it this one here? Okay. If any of you guys are joining the live stream right now, if you guys have got any questions, please put them in the chat box. I'll be happy to help you out. Just the one, not the last. Just this one. So are you talking about this one? So give me a 1 in the chat box for this one. This current break. Oh, so not this one. Give me 1 for this one. Give me 2 for previous. So I can there's a couple of different things there. It's quite awesome, actually. There's a few, and there's this one here, and then or you could go to more like, what else we got here? Let's go actually have a look at, since we've got a nice little tune going on. A bit of an ad break. I'm having a bit of fun. Hey, RK, have you seen some of my other live streams that I've done in the past? I'm not sure if you've seen some of those sessions. Yeah. And you just took a 60-second break, and then the music you played. Yep. Yes, some, but I usually catch you after. Yeah, yeah. I guess what I'm trying to reference there, you probably can notice that this live stream is a lot more completely upgraded, a lot more professional, if you know what I mean. The background, the music, the layouts, just compared to my other live streams there that I've done in the past. So I'm just learning how to do, I'm just learning how to do things a bit more professional. I'm actually using a proper streaming software now to allow me to do all this sort of stuff, where in the past I was just using YouTube. But I'm glad I did. It's obviously a lot more interactive with you guys as well too. Let's step up my game, Mr. John Howe. Let's go down here. Michael, good to see you, my man. Would you mind briefly reviewing your race trades? Oh, let me just quickly do this here. What is the streaming software? This one's StreamYard. It's the pro version, advanced StreamYard, so it's got all the whiz bang things, and it just allows me to do all this stuff that I'm doing here. Allows me to have a really good professional background. Do all this changing here and everything you're getting right now, the music and the overlays and all that sort of stuff. It's actually from a software called StreamYard. Where in the past, Thrifty, once again, I was saying to RK, if you notice some of my live streams in the past have been pretty bland, actually. Pretty boring background, no music, no overlays, no engagement. Pretty boring, actually. Pretty shit. I need to upgrade my game. So, but now, I've spent a bit of time just, if I want to go back to live streaming, and I just need something that's a bit more engaging for you guys, a bit better for you guys, and a bit better for me as well too. So, which I'm really enjoying it. So let me go back to here for a minute. Race trades. I wasn't able to find them in your older videos. Thanks. Michael, can you explain what you mean by that, man? My race trades. I had one race trade. Is that the stock race? And I'm not sure what you're referring to about that as well. If you can get a bit of context around why you're asking that, like where'd you come up with that? What are you trying to get out of that? And that'd be pretty awesome. Let's go to let me take this off the screen. Are you one of my old members, Michael? Were you a member of the program last year? What else we got here? The reason I'm asking, Michael, is because I'm just trying to find the context of how you found about that trade, because that was one of my old trades that I did on that stock there, but oh. So Michael, can you just explain to me what you want me to do with this race trade? Because it was a trade, and was a trade that I took, yes, back in 2024. Oh, thank you. Thank you, okay. I appreciate that, man. For me, it didn't matter because it was to you. Thanks, man. Well, there we go, eh? But I'm pretty sure, okay, mate, I'm pretty sure now utilizing this here, right, with the music and the engagement, it's a lot more engaging for you, right? Still, it's me, which is good, and the content's the same, but it just creates a lot more professionalism, a lot more engagement, even for you, I'm pretty sure, with everything that's going on. And that's all I want. I just want a much better experience for the viewers. Okay, awesome. Well, the setup for me was really simple. Well, actually, there's a lot of details to it. The process is it met my criteria for what's called a level 2 trade. That's what this was called, a level 2 trade. I was using the weekly chart and using the daily chart. But to keep it really simple, the thought process was one. Now, Michael, you've probably heard me talk about a few times. One, always trade with the trend. And secondly, wait for a sideways pattern, right? You've probably heard me talk about that. I'll keep it really simple for you. So we need a good trend and we just need a sideways pattern. So within that, let me since I'm doing this, I might as well bring this up here. So, and that's basically what this was here. Very simple, my man. We had a very strong upward trend. It went sideways. We got the breakout and we had a nice little move that only lasted about a few weeks, but that was the trade there. Coming off the back of one, we had a very strong upward trend, as you can see, high lows all the way up. And there is the infamous sideways pattern. And then we had a nice little, and then that was the trade there. That was only a very short-term trade, didn't have a big move. It's really simple, really, really, really simple. If you have a good trend in place and you get this sideways pattern with the breakout, if you get a breakout, and okay, this is where we do need the breakout, right? So for example here, this is where we look for what? Let me bring this up to here for a minute. Oh. So, okay, as you can see here, right? Look at this here. And then let me bring this up to here. As you can see. So okay, can you see how now this is a different approach, right? That fear and greed index, that's a system on its own within what I taught you there. This one here, yes. Trend, sideways, breakout bar, and then we typically go for a nice move, and then we just manage it from there, right? We manage it up. And then we take the trade from there. So, but then this one here. Why not get in on the previous pullback L-shaped pattern? I'm not sure what you're referring to. Well, I may not have seen it back then. I'm not sure why, or whatever reason. I may not have. Like, I'm not sure if are you referring to prior to this, like in 2023? I'm just not sure what you're actually referring to there. But that was the trade there. Yeah, okay, man, you got to understand, okay? I don't want to confuse you too much, but I have rules and systems for what you're talking about. If it's a 24 moving average trade, I actually have rules to know exactly what I'm looking for with the 24. If it's a 52 type of trade, you know what I mean? Like, I have baskets of things, these setups that I look for, utilizing those. And that's obviously the reason why I do what I do, right? So I have precise rules around those, what I'm looking for. Oh. But I'm not sure if you're referring to what happened beforehand, like before this pattern. So there was the pattern there, and then are you saying before it, like here? November 2023. Okay. Awesome. Now, if I'm going to be precise with my pattern, I want to see an actual L-shaped pattern. What that simply means is I want to see a move up, and then I want to see it go sideways like that. So I'm going to build this base for you, okay? So the perfect pattern is I move up and then we go sideways. You with me so far, Michael? So I'm building this here to show you the current thinking around things. That's the perfect scenarios that I'm looking for. And then we get the breakout, and then we have the move up from there. Now, yeah, obviously this one here. So the purpose of me saying that there is, if I'm according to my rules that I look for, I'm looking for this pattern here. What we have here is we had the move up, but the move was actually down. It wasn't sideways. Do you see that there, Michael? I know it's a slight little difference, but this is exactly what I'm looking for to give me the pattern. This one here is a different type of pattern. This is not what I'm looking for. I'm looking for this sideways, not a flag formation type thing. And the same thing from here as well, and stuff like that. So the big difference. This one gets an, because again, I'm looking for that. I'm not looking for that. And that's all. And the big thing, Michael, is when you get down to, no problem. And Michael, all that simply means is, as you can see, right, like, let me blow this up a bit more. I'll do this. Michael, mate, all that simply means is, as you can see, right, the more precise and specific you can be about exactly what you're looking for in the market, the better your success is going to be long term. Does that make sense, Michael? So that's an example there, right? Now, by the way, that pattern there is rule number 3 within a five trading checklist that I use. trend, looking at momentum. And then this one here is what's called the L-shaped pattern, or the time phase, and then bar entry, and then that's the entries. And then I used trade management techniques from there as well. So then once I get into it, so the more precise you can be, right? So RK, mate, this is a big thing for you, right? Remember, like for example, the fear and greed index, like that needs its own precise set of rules, right? RK, remember I said before, that is a completely different system than a sideways breakout bar. That fear and greed index setup trade is what we talked about before already. Makes sense? And the more we can actually have these rules written down, exactly what we're looking for, the more precise you can be about exactly what you're looking for, the higher the win-loss ratio, the less stress, and the more chances of you actually having a good year and a good trading career. Exactly right. Exactly right. And Michael, mate, you don't want a lot of trades anyway. If you do, that's called over trading. You don't want a lot of trades. You want to make a lot of money. So get into a trade that holds it for a few months, and make a lot of money out of one trade. Don't try to. And that's the whole analogy there. So that's all it is. But I hope that clears it up now, about reasons why I got in and why stuff like that. And then I use proper trade management techniques to let the profit run as much as possible. And then when it's time to exit, then I exit. So I have precise entry points, and then also looking out. Proper exit points as well. Let's go on to gold. Gold and silver. Let's check this out. Let me take this off the screen. Let's go check out the gold and silver market now, since I've put that in the actual title of this. Let's do that here. Now, someone said on my video yesterday, did gold retrace 50%? So this is gold here now, as you can see. And as you can see, it actually did retrace 50% here. It retraced 50%. And then now we're holding 50%. That's a very strong sign. So if gold can get a move up above here, then what I do see coming is possibly another leg to the upside out of gold, like another final leg. This would be the final leg, though, I do believe. Let me bring this up here. Nice, my man. Well, all I say is my trading has completely upgraded in the last 2 years. So I do trade what I was teaching a couple of years ago, but ever since then, my experience, Michael. So it's amazing. And Michael, you'll be able to notice from those things, right? You'll be able to notice from that you can actually start to get a good understanding about trades and stuff like that as well too. But me now, with my experience, I've learned a lot of other things in the marketplace, like the fear ingredient index and what's called a level 2 trade and channel trades and also exhaustion moves, which allowed me to short silver, by the way, meaning like I actually shorted silver up the top here. So I actually shorted silver right on this day right here. I didn't know it wasn't the exact top because we still went up for 3 days and then we had the big drop. But that's a trading system that I have now that tells me about exhaustion moves and we're likely to get a sharp correction. And the same thing actually happened with car as well too. So the exact same setup actually happened with car. So as the market went up, there was a beautiful, beautiful, beautiful short entry right here. It's called the exhaustion move that I have. It's a very short-term trade. Silver actually, this silver trade here that I got into made me 330% return just on this drop through here. And on this day here, that's when I got out. But it's a system, right? It's a system. And then again, same for car. Car actually did an amazing, amazing trade. That bar right there gave me a nice little short entry. It's called the exhaustion move or the exhaustion blow-off move or whatever it's going to call it. And then we have this move. So I have different things that I set up. I have this one here. Plus, I also have a pattern called a triangle breakout setup, which I use for systems, and then I use for targets and so on and so forth. So the purpose of me saying what I'm saying right now is that I'm always evolving. So I'm always finding these repetitive patterns that I can take advantage of with the market. So I do trade what I taught many years ago, which is still the system, trade with the trend, trade sideways, patterns, breakouts. But that's what I call my level 1 trading. I now have level 2. I have level 3. I have these things called channel trades. And I have these other baskets of trades that I now take advantage of through my experience. Awesome. Hey, Thrifty's back. I said gold dipped below the 50%, but this chart, it held. Oh, was that you in the comment section, Thrifty? Was that you that said that? I did see the comment. I think it was on my yesterday's video that I did, or the day before, maybe one of those. I did see that comment. I'm like, oh, I'm pretty sure it actually held the 50%. And then the big point that I want to bring here, Michael, just before I get on to what you're saying there, Thrifty, I want you to understand though, is that when I'm entering the market, I'm saying what type of system am I using, right? What I mean by that is that I have a handful of 4 or 5 different trading patterns and systems that I'm utilizing throughout the year. Am I utilizing those systems that I know are high probability? Or am I just getting into the market because I hope, because I wish, because I'm coming up with a story? Make sense, Michael? That's the defining factor, is that am I using these systems that I can rely on to benefit from market conditions throughout the year? Or am I getting in based off an idea or a tip or a video? Because if I'm getting in based off a tip or a video or something like that, then I'm not using the actual systems for trading, and that's not a good idea from there. That's all I say is you want to utilize the systems for trading. GLD, not gold. Okay. Yep. Let's have a look at GLD. What did GLD do? Oh yeah. Well, it basically got to the 60% level, didn't it? And then the 60% level hold. So it's basically the same thing, right? Right, Thrifty? If you think about it, right? Like 50% retracement, 6%. It's basically the exact same, 50 to 60%, and then holds. So, but we are getting on gold now this type of action going on. That's the GLD. So, and as you know, gold is, and then if I go to the gold chart, that's what's happening here with the actual gold chart. So if I go to my, This is the weekly chart here. Nah, that's too complicated, man. I don't even know what that means. GLD derivative and SLV derivative when reading breakouts for the metals. I think one of the things that I like about using GLD and SLV, it gives me a good reading on the volume. Makes sense, Thrifty? So if I'm looking for a good breakout with good volume to show the institutions are buying, then I can get a much better read on that with GLD, SLV. Then I can just the actual gold price, if that makes sense. So that's one thing I do know with that through there. But let's go have a look at here on the big picture here analysis. So yep. And that's all it is, Michael, right? And that's all it is. It's just having systems that you can rely on. That's all. That's all trading really is, man, right? Like it's not about being right or wrong, which means like you're trying to make a guess, which we talk about opinions here, right? But if we're going to take trades off opinions, meaning like I know a lot of people were short the stock market recently, and what's happened with them just recently is they've gone from, I hope the market's going to go down. I hope the market's going to go down. To, oh no. And then I guarantee you, that's what's happening to a lot of trades right now. They were short the market 2 months ago because I thought that was the top of the crash. And that's exactly what's happened to their trading account. Because they took a decision based off a thought or what they felt inside. I went long the market because the data behind everything that was happening said the market was going to rally soon. I just didn't know when. There's a big differences there. And that's what it is. But looking at gold though, this is ground control. Man, I've been on for 2.5 hours. How was that? Having a lot of fun today, actually. Really enjoying this today. A lot of good value for the peeps. A lot of good value for the peeps. And then we have this one going through here. And it's so powerful. Like, for example, hey, Michael, and if you're still around, Michael and Thrifty and RK for you guys, if you guys are still around. But check this out. What's this? What's this here? Oh, it's the sideways pattern with a good boom. Hey, Michael, do you see how that's the sideways pattern there? That's not the flag pattern. It's really like a sideways L. See that through there? Very simple, right? Why do we have a good breakout? That's the pattern we're looking for. Very simple. And once we see that, the crowd roars. Good job. Stick to the L-shaped pattern. It's actually quite simple, I know, but it works. It's powerful. And guess what? There's no indicators. There's no stochastics, MACDs, RSIs, fundamental data, inflation. When the pattern appears, there's a high probability of the outcome. Then all you have to do is wait for the breakout. We get the breakout, then we're likely to go for a move. How fast it moves up, that's when we start to use. Now, Michael, we can have the 52 moving average here, but what I'm trying to say is I'm trying to reference what we're looking at before with race, right? An example of how powerful it is when we actually just get the sideways pattern off a good, strong upward trend move. You know what I'm trying to say? So that's what I was referencing there of going back to like how powerful that is here, that is there. I made that trade. That was my first sideways breakout trade. Geez, you got in a good one then, didn't you? And the thing about this 50 is, why did we have such a big move here? Yeah, we're in a very big bullish environment. But time, look at this here. We spent 4 months going sideways. That's a lot of fuel being built. Does that make sense, Thrifty? So because we spent all that time going sideways, the breakout was actually quite nice because we had all this fuel built, fuel in the market, energy to make the move. Makes sense? That's why it had such a good move. Now, we didn't know exactly how far, but you can get nice moves when you have a lot of fuel. That's it. That's it. Very simple. And it works. It's so powerful. And that's what I do, guys. Like, I just wait for the patterns. And then when I see them, now that means what? Sometimes I'm not gonna have a trade for a whole month because there is nothing setting up. But my job is, if I can do this, I'm gonna have a good year. That's what it's all about. So, and that's what I'm referencing to, guys. Like, it doesn't have to be that complicated, right? Doesn't have to be that complicated. The hard part is waiting for these things to set up. Because like with gold, it takes you 4 months to get that trade there. It's all about systems, my man. Okay. Once again, right? Because you're not part of what I do as a coach, you've got to take what I've taught you here and create rules. You know what I mean? Like, I just want you to understand that there needs to be you need to have tightening of rules of these types of trades as well. That's all I do say. So everything we do, there needs to be some sort of rule based. And Thrifty, mate, I'm really sure that at the time of the sideways pattern, was I saying on YouTube, I see one more leg coming soon because of the sideways pattern, right? I know that sounds really simple, but it works. It's like, is that what you're referring to? So before that, I was saying, yeah. There is a lot of power in that. Let me move. Right. Let's do this here. And see, guys, like, once again, here, see that there? See that thing there? Right there? Right there. Discipline, strategy, consistency. The discipline around the strategies, and then the consistency. And then apply some of that guy over there. That's a recipe for success. Welcome to the How Capital Management. Which is quite interesting, eh? It's very interesting to see that coming up there. Markets, strategies, freedom. Interesting. All right, guys, just give me a sec here. Should I say? I'll be back in a moment, guys. I have seen the XLE in the past. Let me just do this here. I actually, just a bit of an update for you guys. Obviously, gold. I do see gold breaking out, and I see gold having one big move. So this is what I see overall on gold on a long-term basis here. So gold's doing this here. I do see one more move coming out of gold, but that's it. I think we're getting ready for that. I do see another move coming up, and I think we're so 5,000. I have to say about 6,500 would be a target for me. I think that's what I believe coming. And then, but this is the last move of this bull market that we've been in, I believe, that big bull market there. And then I possibly see this coming on afterwards. So I don't believe this is the start of a move to 10,000. It's the reason why is because we've already been in a very big bull market, and logic, if you look at the overall charts here, every single bull market in history has lasted only around about 2 years. That was about 2 years when we went through this pattern. Same thing. And this has been quite bigger. So I don't believe gold is getting ready for another really big move. I believe we're having one more move, and then the end of this big bull market is what I believe. Oh, this one here. I have seen the XLE bounce off the weekly 52 MA in the past. Nice. I personally don't use the 52 moving average on the weekly chart myself. So that's just so you know, I don't use that. I always use the 52 on the daily chart myself, but it's not right or wrong. It's just whether you consistently use that. You don't want to change it, right? I always like to use the 24. So the 24 is on the weekly chart, and the 52 is on the daily chart here. So they're the moving average I consistently use. You don't want to change it, right? You don't have to swap and change. They're the markets they're the ones that I consistently use throughout there. Okay. Now, just so you know, Michael, what you're doing there is you're taking, the reason why my trading is so successful is because I have step-by-step rules, right? So 52 moving average, that's rule number 2 for me. The sideways is rule number 3 for me. And then I have the entry bar, and then I have the higher time frame, and then I have my trade management techniques. So there is not one thing that is the thing, right? You need an actual proper checklist of what you're looking for. The reason why my trading is so successful is because I have an actual proper step. When you look at the sideways pattern, that's 1 rule out of 5 that I look for the ideal setup. Because if I have the sideways pattern and all the other rules are not met, well, I don't have a trade. It's very simple as that. So I hope you understand that. It's all different systems, RK. Mate, it's all different systems. All different. You gotta have and the thing for you is, RK, is like, again, like, you've got to, for you, right? You've got to believe in this. You've got to believe in the rules you've created for yourself. But the breakout strategy is a chart strategy, patterns that strategy has nothing to do with the fear and greed index. But the fear and greed index has nothing to do with the breakout strategy, because they're different approaches, they're different strategies. But this is where it's important, okay? You don't just make something up. You have something written that you know that works most of the time. It's not just making something up. That's why my trading is so successful. That is all very simple, actually. If you're going to use a fear and greed index strategy, what are the rules? Do you have them written down? Do you know what to look for? If you're going to use the L-shaped pattern, the breakout candle, do you know exactly what to look for? What are your rules? And are they actually working? Do you ever use a log scale? Sometimes, Michael. Sometimes looking at the big long-term charts. The most important thing, Michael, is your consistency, right? That's all it is. It's just the consistency of that. So if you're going to use arithmetic charts and no daily charts, just stick to that. If I'm using log charts, I'm generally using log charts for long-term, big monthly charts. So an example would be, let me bring on my TC2000 here for a minute. Because, okay, why did you not have the 52 moving average race chart? Because a race chart wasn't a 52 moving average trade. Race was called a level 2 trade for me. It wasn't a 52 moving average trade. There's a differences from that there. A level 2 trade for me is a similar setup, but it's using slightly different, like 2 different time frames, weekly charts, daily charts, and rules around that. So similar rules, but slightly a little different there. So race was a level 2 trade rule for me. 52 moving average is a level 1 trade, right, Michael? So, and again, Michael, this is where it's like, we can't be guessing, right? We can't be guessing. If you're going to follow the 52 moving average trades, well, then you need to be following the 52 moving average trades. That's all it is. It's just simple rules. Now, by the way, those level 2 trades, amazing. But let me bring on this here. I can do this on the fly. How good's that? How good's that? I just realized that. Right, so The reference to this one here, do you use log scale? And when I do use log scale, let me bring this chart up here for you. Here. So when I do use log scale for me, Michael, and the reason I'm bringing this software up is to show you this here. Is when I'm looking at longer term charts like this one here. This is a log scale. Simple log scale chart, and I bring on the S&P 500 example. This is what I see with the S&P 500. So this is when I do use the log charts. I've just found it to be quite nice and much easier to read. By the way, why is the top in now and not all? I'd be doing that. Don't be doing that. Again, why are people trying to talk top now? Top's in. Top's in. I'm going short. I'm going short. I'm going short. Shit. Gone. Going short. Why do people make a lot of I'm just saying that because I see so many people like still thinking the top's in for some reason. Like, look what the market's been doing. They'd be like, this time's different, John. Let's go. Get up. No, this time's not different. Get up. So yeah, so that's to answer your question. When I'm trying to get a big view of understanding where we are, because we have the short-term picture, the weekly charts, and then we have the weekly charts, we have the daily charts and stuff like that. These are all the charts here, obviously. But yeah, these are the charts that I like to use for what's called my log charts. These are just this gives me the 10,000 foot view. It's a monthly chart. It's not looking at a daily chart. Daily, you get a lot of noise. This one here gives you a good view of where things are going, which is one of the reasons why I've stayed bullish this entire time, because of this guy right here. Get up. And so therefore, just like most channels, we're probably going to run to the other side of the channel. Just like that's what channels do, right? If the market goes from one bottom of the channel, we're moving up, we're probably going to run to the other side of the channel. So up here, that 9,000 or so, that's probably where we're going to go to. This is the NASDAQ 100. Get up. And there we go, right? So this is when I do use the log charts. The log charts are pretty powerful to me for longer term, really big picture perspectives. It keeps the eye on the prize where we're likely to be heading over the next 1 to 2 years, and what's happening now. And therefore, if we do get a correction for a few months out of the markets, we can see what's really going on. And as you can see, every time we've come through here, the market just continues to make those higher lows all the way up. Higher lows, higher lows, higher lows, higher lows, high low, high low, high low, high low, all the way up. Right? And it just continues up. And those for me, I trade with the trend. And as long as you do that, most of the time it'll continue. And when you do that, you get a nice little profit in the account. I need a cha-ching sound. Do I have a cha-ching sound? That's what happened to people when people follow people like Harry Dent, who keep just for some reason They've got no money left. Every year, the top's in. And then, like, you go through a whole bunch of emotions. You're like, I hope the top's in. I hope the top's in. I hope the top's in. And you end up losing all your money. Now, I know I'm joking about that, making fun of it with the sound effects here, having fun with it. But do you know how many stories I've heard this year alone? Like, I heard one story recently. This guy lost $350,000 and putting his relationship now in debt, and now they're getting a divorce and they're going to have to go bankrupt. That's the serious note. That's what I'm making fun of it. I'm playing around with it because of these sound effects and stuff like that. But that's the whole thing from there, right? And the same thing with all these markets. Like, this is the Russell here. Look at the Russell. Russell's in a big, beautiful upward trend. This here is not the top. Like, what? Go with the trend. Where's the trend? Where's the trend? Because every time you want to go against the trend, guess what? It's going down. It's going down. Oh, shit, it's going against me. And then, right? So this is the Russell. And even the Dow Jones. Like, people worried about the Dow Jones, right? It's like, oh, the Dow Jones means something now. I think you're saying this, Michael. Is it Michael? Doesn't mean shit. Meaning, like, look at this here. When you look at a chart like this, you're like, okay, well, it's still going up, so the trend's up. And this is the long-term. This is the long-term. Look at this chart. Yeah, the top's really in, guys. Look at the top. Look at the top's in. Yeah, look at it go. Top's in. You serious now? Really? Yep, that's what they said 2 months ago. And when I was screaming, guys, no. And then, man, I got some months of that. And it's interesting because the comment section 2 months ago was, no, the top's in, the market's going to go down. You don't understand. And then now I do a video saying I got out for profit. They're like, why'd you get out now? And it's like, that's all it is. But as you can see, Michael, mate, log on gold. Yeah. So this is the logarithmic chart on the market. So if I go to G or D, because this actually gives me a lot more data on this software, you can see I've already got it printing out here. Printed out. So, and if I take everything off the screen here, this is the actual chart here. The reason why is because, again, if I go to gold itself, then I can't actually get a lot of data behind here. I can go to GOD, get a lot more data behind here. So, but even if I did use this is the actual gold chart itself. Remember, everything is price, everything is energy. And look at this big bull market we've had for a while. So now we've had this big bull market here for a while. This is ground control. Right, so they're the different levels you'd be focusing on. There's your sideways pattern. Uh-oh, look at that. Oh, breakout, big move. Oh my goodness. But John, what about the macroeconomics? Go use that. Tell me how it goes for you. Because I guarantee you, that's what's going to happen to your bank account if you do that. So that's what I see here, Michael. You're asking about log scale. So yeah, and as you can see, Michael, the log scale for me is just to get a bird's eye view of the big long-term charts. So for example, here, we've been in this very big bull market now for 2 years. That's what's given me the confidence to say, okay, markets don't just continue on for year after year after year. If we did get a break here and we had to move up to 6.5, maybe even 7,000, this here to me is likely to be the last move and not it's not a start of a big bull market. We've already been in one for 2 years. So I hope you can see now from that there. How I use it and all that sort of stuff. It gives me a really good bird's eye view of where things are at. So I can really guide myself through this here on a day by day, week by week. Do you watch him, Thrifty? Every week there's a top. But the thing is here, Thrifty, man, the thing about this situation, okay, there comes a point in time that if you've been doing something and you know you've been 100% wrong for a long time, I'm pretty sure we need to add a bit of humility to our life and say, what you're doing is not working and we need to change our approach. We need to dig deep. We need to understand why we're making mistakes, where I'm going wrong, and then approach it with a new lens. Some people just want to just keep calling the top ever since 2008. And even though they've been 100% wrong and they know they have, what do they call people that keep doing the same thing over and over again and keep expecting a different result? Oh, I forgot to put the banner up, didn't I? This guy. Gold and silver. So, and also, oh, wait. John, a quick question off the topic. Have you ever heard of, no, I haven't. Okay. Rusk, if XLE bounces off 52, this bull market phase also, then maybe the time will last until some autumn, but we'll see. Hopefully we get a nice breakout pattern. Oh, XLE, we already have. Rask, this is the start of a big bull market. So look at this here. It's, again, bird's eye view. Look at this. We're just starting now. Now, again, caveat, this guy right here. See this guy right here? Listen to it, because I may be wrong. I'm not telling you to do something stupid. I don't know. I'm not currently in XLE. So just FYI, I'm looking to get into it for an investment, but my belief is that this here, after doing nothing for 20 years and then doing this here for 3 years, and now we're just breaking out. This is a monthly chart, by the way, so it takes time. So that's what I see happening. This one here's much nicer. So yes, that's what I see happening there. So you said hopefully we'll get a nice breakout pattern. Like, yeah, possibly for trading opportunities, yeah. But for investments, I see this thing being a great bull market for the next few years. Be smart about risk management, right? You don't go, I'm 100% in. So, but that's what I see there. This is the start of a big breakout. And so then we can go down to the weekly charts. We can see what's happening here. Now what are we doing? Market goes up. Market has a bit of a pause, like it always does. $24 on the weekly chart is coming up behind it, so very nice. I don't think it's going to get to the trend line there. I don't think we're going to get to this trend line here, by the way. It may, but just by the look at this, I would say by looking at this moving average here, this is my 24 on the weekly chart. This is the one that I use. I would say that it's probably going to continue sideways, wait for the moving average to come up through here. And then we start to get but I don't use the 52 on the weekly chart, Rash. I'm not going to check it, okay? I'm not going to check it. I'm not going to go, well, that is different this time. You know what I mean? Like, no. You know what I'm saying, Rash? Like, no. I always use the 24 on the weekly chart, and I know what I'm looking at on the weekly chart. So, but remember, Rash, you're putting too much emphasis on the moving average. The chart is the most important part, right? Why? We did nothing for all this time, and now we're just broken out into a higher high. It's coming down to make a higher low. There's a new trend in place, right? That's the most important part. Moving averages is just one component. We need trend analysis. We need the price and time phases and stuff like that. They're the most important part. Moving averages are just there. Boom, 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 boom. Not for level 2 trade, but only for references, maybe the similarity. Yeah, a level 2 trade is different though. Let's go. I believe so. 50. I believe so, man. Because once again, when I look at charts like this, to me, this is now breaking out to an all-time new high for the last 20 years. 20 years has been doing nothing in this sector. And now we're just breaking out. That's not a coincidence. That's not like, oh my goodness, what a mistake that was. The energy sector is the new gold market, just like back here, right? Remember gold back here for 3 years, and then it broke, and then we had this for 2 years? There's a new sheriff in town. XLE is the new gold opportunity. Gold was like that 2 years ago. This is the same thing as gold, I believe. Commodity guru. Don't call anyone a guru, man. No, there's no real guru of anything, man. I'm not a guru. No one's really a guru. They just had experiences in the market, that's all. Now, by the way, XLE, commodities, XLE is the energy sector. So, yeah. Don't put anyone on a pedestal, man. Don't call anyone a guru. No one's a guru. I'm not a guru. It's just I've had many years experience of, and then I just share what actually works for me. Alrighty. Well, I think I want to well, my folks, well, my ladies and gentlemen, that is the end of today's show. I am finished. Over 3 hours today up in the house. Up in the house. I want to thank you for visiting my show. Remember this guy over here. 1. Remember this guy over here 2. Right? And remember the How Capital coming soon. All in place. Thank you very much for watching, guys. I appreciate it. And until next time, I will speak to you soon. Bye.